Are you tired of watching others rake in profits, or so it seems, so much more than it's even possible, why you feel like you're just paying tax every single week, every single month in the Australian business sector? My name is James Lewis. I'm the CEO of White Boulder Investments and BizLeads. And over the past 5 years, I'd have to say I've paid a minimum of 10 million in taxes. And today we're going to go over some of the Australian do's and don'ts and basically what's actually under the hood in terms of tax law, so you can have a very clear picture of actually what is going on. So I'm going to quickly jump over to a presentation so you can see everything about Australian tax and how to minimize it in the most legal way possible, and also potential alternatives. So you can see what places in the world, specifically Dubai, as I'm considering a move to Dubai, just simply because of the tax. Australia is absolutely absurd. You pay anywhere from 30 to 50% up front, then you pay a GST on business, then you pay 50% capital gains on anything that you make. So I'm going to quickly cover the basically the do's and don'ts in the Australian tax system on a quick presentation. So this is going to be an Australia versus Dubai tax kind of difference. Now, this isn't just to show versus Dubai, it's just to show you where Australia is and some little things along the way that you can do, and just tips and tricks. And I'll run through this as quickly as possible. So we've obviously got really high marginal income tax rates, the top one being 45% plus Medicare levy. Dubai is zero. An income comparison on a $200,000 salary usually comes to about $65,000. Okay, so you're saving the 30%, everything like that. However, there's GST, there's luxury car tax, there is every single tax you can possibly think of. Plus things like what's called the bracket creep. Now, bracket creep basically means because Australian inflation keeps getting pushed higher and higher, you just move to the next tax bracket. You get no increased cost of living, and on top of no increased cost of living, you also are just paying more tax. You actually go down, and you're going down in the economy. You're going from middle to lower, upper to lower, like class, and basically it's just happening in real time. It's really unfortunate. Then there's GST. 10% on everything. It's just basically a regressive tax. And Dubai, yes, it has 5% VAT, but we have 10%. And there are some places in the world that are higher. So, for example, 10% is just on everything. So you can think of this as when you earn money in the business, you also get taxed 10%. But when you buy anything, you get taxed 10%. So anywhere you're getting paid, you basically pay 30 to 45% tax on your income. But then on top of that, you pay 10% on everything that you buy. So it's in between 40 and 55%. Then you go and try and purchase anything, and anything big like investment properties, and you get hit with stamp duty. So stamp duty is anywhere from 3 to 5%. I know it says 4 to 5.5, which is true, but it's usually anywhere from like 3 to 5. And basically that's then stamp duty on any property. So you're going to make sure that when you're buying property, you just have to do it, but then you can't transfer, you can't do anything. And on every single dollar that you're putting in, you basically that you earn, you're getting taxed 40, 50%, 60% on it. And then you get taxed on top of that, everything you buy. And because property prices are so big, when you put in that money, that 3% could be like 30% of your deposit. So you're losing another 30% to the tax on the money that's been taxed 50%. And there's land tax. I had a big issue with land tax because I got hit with my yearly land tax bill now, but I only realized the laws changed in like 2023 or whatever when you have interstate holdings of properties. So now I'm getting paid tax tens of thousands of dollars every single year just for owning land now, which is absolutely absurd. So really watch out for things like that. And this is more so to just educate people on the do's and don'ts of things. So like I have to pay now tens of thousands every single year on land tax because I basically, what it is I hold property interstate. That's not my principal place of residence. Okay, so when it's an investment, you're now paying land tax. Then there's capital gains, which is super basic. Anything under 12 months that you've held for under 12 months, you then have to pay 50% on whatever your gain was. So you buy a property for $1 million, it goes up by 100,000. You then sell it for 1.1 million. You then basically on that $100,000 gain, let's assume you don't get taxed again, but then it's 50% capital gain. So you have to then pay $50,000 to the government. And obviously you got like Dubai that's zero and things like that. Then you got business tax. Now I pay accountants anywhere from $10,000 to $20,000 per year to manage my accounting for the companies. It may be a lot, but I'm sure all of you pay anywhere from $3,000 to $5,000 every single year. And then you pay 25 to 30% on actually company profits as well, if there are any left over after paying all small business problems, like the pay-as-you-go tax, superannuation, everything like that. Then after that, you have basically what I was just referring to, which is basically the treatment of small business. Now, I would consider a small business anyone under doing 3 to 4 million per month is a small business. Now, stick with me for a second. I'm not trying to look down on people who do anything under that. I've never done $3 or $4 million per month. Our biggest months are anywhere from 1.8 million to $2 million per month. They're not quite up towards the month of 3-4 million or anything like that. Now, basically, that's revenue, by the way, not profit. And basically, from that, like when you have 20% profit margins on a $100,000 a month business with 20 grand, you can't really, you can have a good life, but you can't really move any mountains. Now, when you have 20% on a $3 million business, you're making $600,000 per month in profit, in EBIT before tax. Now, that's some serious money. You can do a lot with that. It's $7.2 million per year, I believe. So basically, when you get to that 3 to 4 million, you're now not considered a small business. So the heavy compliance, payroll tax, fringe benefit, GST reporting and everything really affects you because you have to pay kind of like the same minimum benchmarks on all the way up, and you don't have the profit to actually like get a good accountant, get a good CFO, get all of this stuff to help the business. So you're just getting absolutely ripped in real time by the Australian government, unfortunately. And after that, you then go, you had a good year, you go buy a car, and then they go and charge you on the car 33% on top of it, and it's only for a $70,000 car, which is absolutely crazy. So you pay 33% on that, and that's why everyone on Instagram, and you probably see these things online, that everyone seems like they have a better car or a nicer car. And what it is they're just in a different country. They're just not in Australia. Like, it's just how it is. They can easily get a $500,000 car when, first of all, our currency is lower than America and things like that. But besides that, they don't have to pay import tax. They don't have, or as much import tax. They don't have to pay the luxury goods tax. They don't have to pay GST, things like that. Now, considering I'm thinking of moving to Dubai, I looked into exit tax. Now, what I have to do when exiting, which I think this is absolutely absurd, and I hope everyone agrees with this, that this is absurd, is I have to value my businesses, report that, and then pay 50% capital gains on my value of the businesses, which is absolutely absurd. Thinking that people can do that is like absolutely absurd. Even if you have a business that's worth $1 million, that's $500,000 that you're paying just out of your pocket just to relocate to another country. Like, it's absolutely absurd, let alone if your business is worth 10 million or more. Like, it is absolutely absurd, the tax laws in Australia, and it's getting worse and worse every single day. That's why I'm considering a move to Dubai. Still having operations in Australia because all the companies are obviously here in Australia and have Australian operations. So nothing like that's going to change. But basically just a location of where the money's kind of being paid to as such. Now, obviously, here's the summary as well, so you can see it side by side in terms of comparison. Now, I'm going to have videos that come out on how I'm trying to help with this, how you can help in terms of your business for reducing tax. And more importantly, most of my content is going to be obviously around the value and increasing profits for your business. So obviously look at all my previous videos and the future videos, and that should give a really good understanding on increasing profits in the business, so you have to worry less about tax because you're making so much money. So hopefully that was valuable. Again, my name is James Lewis. Hopefully you guys got some value about at least something that you didn't know about the Australian tax system, and that you can actually use to potentially come up with your own solutions or anything like that around how to actually either reduce it or just information on it so you know kind of what not to do. Like, you need to hold property for longer than 12 months before you sell it. Very important. So yeah, hopefully that helped, and I'll speak with you guys soon.